What's up, traders? Welcome back. Yes, back. Hello, my lovelies. Welcome back to the charts. Today we're back, and I'm gonna be doing a weekly recap for the trades that I took, and basically just give a rundown of how my Nasdaq my Nasdaq trades went. So sorry guys, I'm a bit kind of feeling not really well. I've been having the flu, so you're just gonna have to bear with my voice for now. So coming into this week, I anticipated for price to get to all-time highs, and that was what I anticipated for the week. I expected for price to get back to all-time highs, which are here right at this level. You can see that I marked out all-time highs, and before we got to all-time highs, I was anticipating for this high to get taken out. So coming into the week, this was analysis that I did on Monday morning. I saw the price had been respecting bullish speedy raise. We got support from this order block and from this fair value gap, sorry, with this volume imbalance, and we closed above this volume imbalance as well. So everything was just saying that going into this week, I anticipated for price to get to all-time highs. Firstly, this high before we get to all-time highs. So for the long term, I anticipated for price to take out these highs and then finally all-time highs. So dropping down, this is a much clearer view of the charts. You can see I also annotated the weekly consequent encouragement of last of Friday's closing candle. I wanted to see if price was going to respect this, but also stay above the upper half of this if we're going to be bullish. So I was looking at the consequent encouragement of Friday's wick to see that price would trade above it, but also marked out the lower end of the week because I wanted to see the price would hold the upper half. It was now an analysis that I did on Wednesday, because Monday, usually I don't trade Monday and Tuesday. Actually, this week, Tuesday, I never had a setup. So my most active trading days were Wednesday, Thursday, and Friday. But the first 2 days of the week, really, I didn't really have any setups. But again, I was still looking for all-time highs to get taken out. So my overall bias was bullish, and because I had seen the price was heavily pumping towards this all-time highs, I marked out the new week opening gap high and low, the previous day's midnight opening price, and current day's midnight opening price. At that point, I also noticed that we had this high that was taken out, and to be honest, I did anticipate for price to get back down for some kind of sell side liquidity before it could actually push up. So I just took note of this highs because I wanted to see how price was going to react. This is an analysis that I had for Wednesday, and initially, remember, we had news at 8:30, and initially I was being bullish. I wanted to see, in my head, I was now thinking that, okay, if I'm bullish, I want to see sell side liquidity get taken before we can actually move on towards the all-time highs. So initially, I wanted to see data lows get taken out because we had 8:30 a.m. news come out, and that caused like a really big spike. We were high above the midnight opening price. We were very expensive literally on the day, and I also noticed that we had at market open, price created this low, which created an SMT with ES, which failed. So at that point, market open, I realized that because we had this 8:30 week, there's probably a manipulation for smart money to engineer liquidity below that it can use to channel higher to all-time highs. So coming into market open, I also noticed that we had this minor, very minor type range that I expected to see price create a manipulation off of. And we're going to see this clearly on the lower time frames, that when we had the manipulation of this very tight range, notice that at market open, it did end up taking data lows, as well as working into the previous volume imbalance from the daily time frame, as well as the opening range gap consequent encouragement, which is this purple level. So you can notice the price traded into that, but notice the kind of body that we got, and that was exactly what I wanted to see. We left Asia lows, we left London highs, and price wasn't really willing to get back there. So usually when I go into any trading session, one of the things that I look for as a confluence is to make sure that if I'm bullish, I want to see price below the midnight opening range. It's not always a factor, but it's one of those confluences that I always look for. I say it's not always a factor because most times I can have my bias, bullish, and maybe we've taken out sell side liquidity, but just because price doesn't go below midnight opening price does not mean that if every other confluence is signaling towards bullish prices, I'm not going to take that trade. So we fell below midnight opening price, but because the candle failed to displace the midnight opening price, that was already another confluence for me trading into this volume imbalance, into the opening range gap, consequent encouragement, we failed to displace it. And price is literally at this point showing me that I'm not interested in going to, this is how I saw it, I'm not interested in seeking, lower liquidity, sell side liquidity. And because of that, that is why I now confirm my bias for price to push to this high, price to get to this high, not really all-time highs yet. So that was the analysis that I had. The mere fact that we fell short of the midnight opening price was something that really, really gave me more confirmation that price was interested in seeking buy side liquidity. This is back into the 1 hour time frame because I wanted to show how price had traded back into this CB that was now inverted. Price tapped into the volume imbalance, the opening range constant encouragement. We tapped into it, but notice where the body closed. So already, this is just me again looking for confluences for price to get above, and I'm getting every confluence that I always look for whenever I go into the market. So but initially I wanted to go up for pre-session liquidity, and then finally the data highs the price had created. This was the entry that I had, and I wrote here that the fact that we had news with this massive candle, I saw it as manipulation in the way that even if smart money wanted to push price higher, they're gonna have to take out people that, maybe caught this move, people that had been buying since the day open. They're going to have to take out their stops, and then smart money will engineer that liquidity that they took to fair price, which is above these relative equal highs. This is also a play that I've also saved in my playbook. It has happened multiple times. I've seen it happen all the times where we have this minor tight range that happens prior to the market open. We manipulate that with this massive candle. We take out people that bought with this 8:30 candle news, and then we trade back into a higher time frame PDA. So one of the things that I was going through my journal, one of the things that I want to take note of from this week and into my trading sessions in the future is that whenever the market opens at 9:30, there is always a PD array the price trades into. So that's going to be a volume imbalance. That's going to be a relative equal lows, relative equal highs, new week opening gap, new week opening, new day opening gap. So that's one thing that I'm taking on from this week, that I should take note of every PD array, what lows have been taken, what highs have been taken, what order block have we traded into, and so on and so forth. Have we fallen short of the midnight opening price? Have we displaced the midnight opening price? These are all confluences that I look for whenever I want to take a trade. So the fact that I had seen that in market open, we had the manipulation of this very clear and very evident tight range. Price takes out data lows, all people that took who bought the move, this move, and we fall short of the midnight opening price. That are just confluences that I needed to see for me to be able to seek buy side liquidity as I had analyzed before. Something I've really learned is to be very, very, very patient. I obviously now this is where I wait for my playbook, for my entry criteria to play out. I wait if I'm bullish, I want to see first presentation fair value gap, a very evident close above it, and that was all I needed. I waited for price to trade back down here, and that was where I had my entry. So I had put my entry at 35 points for a partial, and I broke even at this point. After I took the partial, you can rather we've had very, very slow price action, very lagging price action compared to the ES. So we've had very, very slow price action, and I ended up taking one partial and I broke even, and I just didn't like the price action. But I'm really, really happy that I followed my trade plan and my analysis and my entry criteria, and most of all, I'm really happy with myself that I was very patient with this trade, because it's easy to say, oh, price is going to run without me, and then you enter any trade. This is now Thursday's price action. Remember, I was planning and anticipating for price to get to all-time highs. I noticed that this candle barely traded into the previous day's week CE, so you can see that we opened in the upper half of the trade of the previous candle's lower wick, and I was watching to see again how price would respect this lower half, because I wanted it to be above the consequent encouragement of this week. I wanted to see the reaction that would come from there. This is the 1 hour time frame. I was seeing that bullish price action, bullish PD array, sorry, were being respected a lot. Again, we have this level the price found support with, this minor volume imbalance the price had respected at market open. I wanted to see the bodies heavily fail to displace, which is exactly what price was doing. We trade to higher time frame PD arrays and the bodies are just failing to displace. So Since we had the previous data highs that price couldn't reach on Wednesday, I was anticipating for those highs to get taken out before we actually get to all-time highs. So that was what I saw. I came into this day expecting price to be bullish, buy side liquidity to get taken out in a time frame. This is just something that I had to record on the regular trading hours, that we had these highs taken. So because we had these highs taken, I expected price to trade back into some kind of sell side liquidity, especially at market open, before we could actually push out to the data highs. So it was just a little side note for me. Now this is back to electronic trading hours. I noticed that price again constantly respecting bullish video rays. We have fair value gaps get traded into without body displacement. Changing state of delivery that happens right here. We have a balanced price range. Price trades into it, and also at 8:30, price wick back into this balanced price range after the change in state of delivery of this bearish leg, and notice the body doesn't displace it. That is exactly what I always look for. If price trades into a higher time frame PD array, I want to see the bodies not displace it. Ideally, if it's in my hands, I want to see that the bodies don't displace that level. We also found support at the midnight opening range after taking liquidity, so at the midnight opening price, and we continue to push higher. So that's just another confluence for me. So now this was the entry time frame I've come into the session expecting previous day data highs to get taken out. And again, this is a setup that I have encountered in my playbook a number of times. It's one of the setups that I didn't have to think about a lot. So, and another thing that I always look for, if since I'm bullish, I want to see a one-sided bearish run after the market open, which is exactly what we saw. But you notice that this one-sided bearish run fell short of the midnight opening price and the consequent encroachment of the opening range gap. So the bodies fail to close below the opening range gap, consequent encroachment, and the midnight opening price. For me, that was a lot of intel, and the fact that we traded into that without body closure below and created how should I say, a displacement above. I wanted to see this fair value gap act as ideally a breakaway gap. So that was what I saw, and I love how price respected this as a breakaway gap. Price trades above the first presentation fair value gap, it closes above, and immediately I enter. So I held these trades about close to 10. We traded. Now the mistake that I made was that I reduced my risk when I saw price get too close to my partial level. I reduced my risk, but when now I started seeing price come back down heavily, I knew that okay, maybe I should extend my risk, and this is the mistake that I made. I increased my stop loss from where I had reduced it to this level, and I brought it back down. The mistake that I made was that I didn't even bring it back down to what it was initially. Initially, my stop was at 27.5 points, but when I saw this candle come back down, I decided to forget that I had reduced my risk, and I brought it back down to about 24 points. So the mistake that I heavily made with this trade is that I moved my stop loss before my partial profit was taken. I usually take off my partials at 35 points, but in this case, I literally saw price trade to that area, and I started tampering with my stop loss. So, of course, going into next week, this is something that I have learned not to tamper with my stop loss until one position comes off. I don't want to tamper with my stop loss, and that's exactly what cost me this trade. This was actually a good trade, even though it took long. It was actually a very good trade, but the fact that I tempered with my stop was because immediately after price got to this level, my stop was around here. I know you may see the position tool here, but my stop was a little less than this, so it was around here. So when price traded, it was as though it wicked me out, and then it immediately shot to take profit later on in the day. So that's a mistake that I made, and going into next week, of course, I'm taking accountability for that, and I want to be conscious of not touching my stop loss. If you set a stop loss, you set a take profit, honor it. If one partial, I don't want to tamper with my stop loss until one partial exactly comes off. One partial has to come off, and that order has to be cancelled. That was how I ended up losing on this trade, and it was purely my fault. It was not the market, because I had a great analysis, I had great annotations, and this was something that cost me this trade. Friday's trade. Friday was kind of a bittersweet week for me, a free trade day for me. Again, I was still anticipating the all-time highs to get taken out as a draw, and like you can see, I had the annotation that we were very close to all-time highs, and I was more inclined to take out all-time highs if we manipulate lower. Today price opened above yesterday's closing price. So the fact that we opened way above the previous day's opening price was something that I could have, taken into consideration, that we were actually continuing to be bullish, and the fact that we had a rejection from the week CE and the previous day's fast presentation for value gap. Now, what really clouded my mind with this trade was the fact that we had taken previous day data highs. This was exactly how I went into yesterday's session. I went into yesterday's session thinking that we were going to be bearish, even though, yes, in the longer term, I expected for all-time highs to get taken out. The fact that we displaced through, we took out liquidity at previous day data highs, and there was no valid displacement below that. So it was very evident that we had created this very tight range prior to market open, even when it's visible on the 1 hour time frame. And for me, I don't know why I didn't consider this. I more likely considered this sweep prior to market open, and I expected for price to trade back down. Then we could engineer liquidity back above. So that was what I went into yesterday's session thinking. We are going to draw back to some level of sell side liquidity before we actually push back, which price clearly did, but just that my entry did not align with that. But price actually drew to sell side liquidity, and it did make that move. Now, the mistake, of course, that I made was that I came into that session and I still, even after price giving me the confirmations that it wanted to push higher, I still wanted to keep on being bearish. So that was a mistake that I made, and I'm using that as a learning curve. This is prior to market open. We have this manipulation of that range very clear, and like you can see, price actually traded to the midday opening gap high and the midday opening gap low. Midnight opening price, we fell short of it. Something that I have now realized is that when price trades to the midnight opening price, you have to take note of, did we displace it or did we fall short of it? Because that displacement or falling short of it is something that will give you more and more intel. So yesterday, though, because of the choppy price action that we had throughout the week, I was staying away from the first 30 minutes of the day because I wanted to allow price to give me more intel, and we also had news at 10. One of the things that I do in a market like this is I always stay away from the 30 minutes of the day if price is choppy and we have news at 10 a.m. So that is exactly why I was staying away from the first 30 minutes to let price give me more intel. But you know that if price traded to sell side liquidity before, I'm looking back and I'm just like, okay, why did you still want to be bearish even after we fell short of the midnight opening price? The price had price trade to this, like I had mentioned, and I was looking at this low as a first trade objective. Now, when I saw this consequent encroachment of this week get respected and price emissively pump, I was just waiting for the body closure to close below, but apparently that is not what price was looking for, and I now see that indeed that is not what price was interested in for the day. So we didn't have a massive body candle closure below, and that was why I didn't have any trade setups, because had this candle closed below this, I would have set an entry sell limit here, and I would have traded back into this first foot objective. But I had to now go back and reanalyze, and that was when I saw that price was actually interested in seeking buy side liquidity to all-time highs. And I don't know, I was just so focused on looking for a reversal that I actually missed this trade, and it was now my analysis, my entry actually presented itself. So this is now how I would have gone back to reanalyze this trade. So notice that prior to market open, we had this manipulation of this very tight range, but we manipulated into the previous day's first presentation fair value gap, and look at how the body rejected and we traded back above. So now we have this discount range. I noticed the price traded back into minor discount of this range. The body failed. New day opening gap, new midnight opening price, we trade back into those areas. Higher time frame PD raise, the bodies failed to disclose. Already something that I should have looked at and said, okay, you know what, price is actually interested in going up to all-time highs, because you can look at this as accumulation, manipulation, and later on distribution to all-time highs. That was something that I saw, and now, of course, that I go back, I do realize that even without engaging in the first 30 minutes of the open session, price, yes, met that week with the news at 10 a.m., and I could have gotten my entry here. So again, we trade back into the midnight opening price, we fall short of it, we fail to displace it, find support there, and then we push higher. So one of the reasons as to why I genuinely, honestly never took this trade and I never saw it as a viable setup was that we were so close to all-time highs, and when I measured the amount of points, the number of points from my supposed entry to the all-time highs, I realized that it was not 55 points like I always look for, and I now realized that this was my mistake. I focused so much on the return that I was gonna get instead of actually following what price was doing. That's one of the mistakes that I made. Another mistake that I realized that I made was that I was so focused on looking for a reversal from price action instead of actually following what price was actually printing. So I should have been okay with walking away with 40 points rather than missing out on a whole good trade for 50 points. So that is something that I am going to implement going into next week, and I should be okay with walking away with whatever price action gives me the ability to be. What would have given this trade to me would be price trading into the new day opening up high, new day opening up low, falling short of the midnight opening price, the body closing above, and then distribution to all-time highs. That was exactly how I would have taken this trade, to all-time highs, because my setup did present. It's just that I was so focused on looking for a reversal from price action, which is now my mistake, because I should now focus on what price is printing and go with the flow rather than create your own bias. Was gonna be my entry, and I should have been okay with walking away with 40 points. So that was the breakdown for this trade. I am still break even on the week. I'm so close to passing this evaluation, and hopefully next week I will do better and learn from my mistakes. But for now, I'm happy, of course, with the trade management. I took an L and I took one win, so I'm not going to disregard that. So that is going to be it for me for this week, and I hope that you guys enjoyed this video. If you have anything to comment or how your trading week was, drop it down in the comment section. I'll be glad to interact with you guys. So that's it for me this week. See you guys next week. Peace and love.